Welcome back, everybody. It is Tuesday night, and this is VettedVA Live. We usually go 8 weeks on and 4 weeks off on the rotation. We took a really extended rotation here for summer vacation, 4th of July, but we are back. For those of you who are new here, haven't seen the show before, our number one most important purpose here is to answer your questions. So we have a topic that we're going to go through. So if you're not asking a lot of questions, the three of us are going to talk about something that would be of value to you. But most importantly, we want to answer your questions. So throw your questions in the comments, anything mortgage, real estate related, VA, not VA. If you're here, we've got a realtor, we've got 2 lenders. We can cover all of the information that you need. So with that, a reminder, a couple of ways that we can help here. You can show up here, ask questions. If you're not already a member of the VettedVA Facebook group, suggest you go out there and join. We have a group of vetted pros just like this, basically 24 hours a day, 7 days a week, 365 days out of the year to answer your mortgage and real estate questions. And they're not there to pitch you anything. They're not there to sell you. If you need help and you want to get connected with a realtor or loan officer, great. If you just have a question on where you are in the process, we always, literally almost any time of the day, any day of the year, have someone to help you. So with that, I have Alexis Brown, a realtor in Tennessee. You're Memphis, Tennessee? Did I get that?
That's right. I'm in Memphis.
All right. She's going to try to claim that she's from San Diego, but she's in Memphis, Tennessee.
I am from sunny San Diego. Don't listen to him.
All right. And then Jerry is the man who cannot be pinned down. Jerry Avila, mortgage loan originator, California, Texas, Arizona, Nevada. Am I leaving anything out, Jerry? Where all do you cover?
Colorado, and working on a bunch of other states all at the same time. So
perfect. So VA experts. And what we're going to talk about tonight is a smooth and easy VA approval. So pre-approval all the way through to the closing. What does that look like? So just starting with that, Alexis, one of the questions that loan officers we always get, Alexis told me to call you. She's just insisting that I got to call a loan officer. I think they get kickbacks. I don't know why they're insisting on this. As a realtor, why is it important that a potential home buyer who wants to buy a home wants you to show them homes? Why is it important to you and important to them that they start with that pre-approval?
Well, the very first step when buying a home is to always know where your numbers are at. Now, yes, meet with an agent. We're going to help you find a property that meets your needs, what you or your family's looking for. However, how much is that house going to cost you a month? This is why it's incredibly important to talk to a loan professional first. Establish what your budget is and arrive at a price point that you're comfortable with, because when the deal is done, you're responsible for the mortgage. So always go with a loan professional first.
So essentially, everyone has constraints. Mm-hmm. Unless you're Elon Musk, who could just write a check for any, even though he says he's not going to own any real estate. It's an anti-real estate. But unless you have that kind of money, you have constraints. Is it your income in terms of what you can repay? Is it the amount of cash that you have? Any number of things, your location, your timeline. We have constraints, and starting with the money side of it allows us to identify those, identify workarounds, come up with a plan. So in terms of that plan, Jerry, let's just say hypothetical, you're in Memphis. Alexis sends a veteran over to you. It says, hey, Chuck and Susie want to buy a $500,000 house here in Memphis. Need to make sure they're pre-approved and they know what the terms look like. Where do you start that pre-approval process when someone reaches out to you and gets connected?
So initially, it's just really understanding exactly where they're at. Knowing exactly, if they know where their FICO score is, understanding exactly how long they've been at their current employer, whether they've been self-employed. If they are self-employed or a contractor, makes a huge difference, because it dictates where the conversation starts going, right? Because at that point, I have to identify exactly how long you've been at that self-employed job or as a contractor job where you're getting paid 1099. And as you transitioned out of the military, did you immediately go into that type of role, or did you, go into a W-2 and then switch over to 1099? So all of these questions start rolling out, just because I need to identify exactly where my beginning points are in order to identify exactly how much income I can actually count on, the consistency of it, and your ability to then be able to own the home.
So I'm going to try to not tip my hand on my feelings on this. And I don't have a great poker face, so I'm probably not going to do a very good job of it. But I have friends who are very good loan officers. And when they get an inbound referral, whether it's from a past client, whether it's from a realtor, what they love to do is send out an email that says, hey, here's a link to my online application. Please complete this and we can schedule some time to talk. Is that where you start, Jerry, or how does that work when someone is connected with you?
No, I want to talk to you first. There's no point in me taking on an application if we can't establish if I'm even the right fit for you, right? One, if you can't get a hold of me, that's a problem. Two, if we don't jive right off the bat, that's probably not going to work for you. Why? Because at the end of the day, it comes down to trust too. And a lot of times, some people just don't vibe well. And they're going to end up walking anyway. So at that point, it's like, don't waste your time if I'm not the right fit for you. At the end of it all, you want to make sure that the individual that you're working with is actually paying attention to your particulars and cares about you as a person versus just the transactional part, right? Because it is a transaction, but at the end of the day, it needs to be more than just that for the individual that's helping you.
Absolutely. I mean, you said something really important there, talking about trust. I look at that and I go, who in the world trusts me enough when we haven't spoken that I can send you a link where I'm asking for your social security number, your date of birth, your spouse's name, where you've lived, how many dependents you have. That's pretty personal information, right? I just got off the phone with a young couple. They're not veterans, but we went through the process and we ended it with, hey, the good news is next time we talk, it's not going to be an interrogation where I ask you 9,000 questions. I'm going to be providing you information. So for me, when I'm doing that front end call, I always like to start with, number one, we're here to answer any and all questions you have. So before I start that interrogation where I ask when are you leaving the military? What type of work are you going into? All the things that we need to know to get that rock solid pre-approval. I just want to know, what questions do you have? And the reality is, if you are like most buyers, you don't have a whole lot of questions up front. I would like to buy a house and I need to get pre-approved. What's next? That's kind of how it goes. There may be a question or two, but when you really have questions, if you're like most buyers that I deal with, it's after we've had the initial conversation, you've had the opportunity to communicate to me what the ideal outcome is. You've answered my questions, so I know your situation. I know what documentation we need, and we have a roadmap for getting there. Then we're going to send you that link, most likely an online application and a portal for you to securely upload your documentation. So now all that roadmap that we came up with in the upfront conversation, now we're checking all the boxes. Okay, is the income documented? Is everything that you told me correct? Do we have a certificate of eligibility that confirms that you actually are eligible for VA financing? All of those things up front. So with that, Jerry, assuming that the borrower did that, we had a great upfront conversation, sent out the application, requested the documentation, they sent everything back, and you've reviewed it. At that point in the pre-approval process, what does it look like for the buyer?
Well, at that point, it's really now the reintroduction back over to the realtor, because once we've already established that they qualify, what their parameters look like, what the variances are depending on what type of property they're looking at, whether they're right in between a single family or a condo or something like that, you have to really identify, okay, here are your avenues. Now let's go ahead and take this back to your realtor. And at that point, it's like a lot of times they already have somebody in mind. And if they do not, then at that point, I typically will refer them, like, especially if they're here in the group, I'll refer them right back into the group to identify a realtor out of, off of VettedVA's map. If they already have somebody, then I will do my best to immediately do the introduction, make sure that they understand exactly who I am, what do I do, and what my value is as the lender that's helping their specific client. Just so that way the introduction is done first, and then I put us all together in the three-way text, just because I feel like that is the ideal way to make sure that all communication is clear and transparent across the board. And so that's usually the initial transition over from when I qualified over to getting everyone rolling.
So Alexis, we started that by assuming that was a situation where you had referred someone over. But let's say it wasn't. Let's say that Jerry has this pre-approved person and he says, hey, they're looking to buy in Memphis. Alexis, you're an awesome realtor in Memphis. I have these pre-approved borrowers. What do you want and need to know from the lender and what you need to know about that pre-approval at that point in time?
Well, I always need to know a price point. If there's anything we need to be aware of, sometimes people are working on things to get to a number. All right. So if that's happening, I need to know about that. Sometimes we can't close by a certain date because they're waiting on a house to close. That's incredibly important too. Oftentimes people already own a home and they're trying to purchase a home, whether it's in state, out of state, in the area. These are things that the lender is going to want to know too, because, well, the lender is going to make the real estate agent aware of this, because if you need to sell a property, whether it's for your VA eligibility, your entitlement, or if it's due to debt to income ratio. So that's important as well. Sometimes we're waiting on gift funds as well. You know, we talk about gift funds, especially with other loan types. Also, we see them with VA loans. But those sort of questions are incredibly important. Sometimes, too, lenders will tell me up front, hey, this purchaser needs closing cost assistance. You know, we're going in letting you know. They are going to need assistance. So please make sure that you're advocating for them. Believe it or not, sometimes buyers don't let agents know that right away. So if you are a buyer and you're watching this video and you know off the top that you're going to need closing cost assistance, or you're looking for a down payment assistance program, anything like that, please do make your agent aware of it too. Now, obviously, the wonderful gentlemen, Jerry and Josh, they're great loan professionals and they're going to let agents know. However, I can tell you, not all loan pros do. But gentlemen, I have a question though. So initially, Josh, I don't want to say anything, but you talked about buyers when they're first interviewing, right? You do the first onboarding, they have questions. I've sat through a lot of these lives. What type of questions should buyers know? Because you don't know what you don't know. So buyers don't know what they don't know. So what's something buyers should ask when they first reach out to the loan professional during the pre-approval process? What are important questions they should ask to make sure that loan officer is a good fit?
This is kind of like the curse of knowledge. After 29 years of doing this, it's hard to take that knowledge off and say, what does someone relatively new in the process, and realizing that we talk to people across the spectrum. For me, Jerry, I don't know what percentage of your business is first-time buyers, but many of my buyers, 55, 65% are first-time buyers. So a move-up buyer, it's a really different conversation because they have that point of reference. Hey, the last time I did this, I just went to my bank and here's how it went. Here's what I liked. Here's what I didn't like. And they're kind of more open to asking questions. But those first-time buyers, I don't know that the questions, even when they ask them, are that great or that helpful up front. It's not because they're dumb or they're bad questions. It's just that we don't really have that frame of reference. The questions get better as I give them more information. And a lot of times when I ask them questions, it's triggering things. Some of the questions, those clients that I just talked with this afternoon, they had some unique situations. And so they were asking me things like, hey, I just got my master's last year. I've only been on my job since April of last year, and I get commissions. Is that a problem? So it's not really a question of me to find out if I'm a good fit. It's a question saying, hey, how about me? Is that something about me that's a problem in terms of qualifying? So when we talk about honesty with your realtor, hey, I only have $9,000 to make this work. And Jerry told me I need $14,000, or we got to get a lender credit or a seller credit. That's important for everyone to know and for everyone to be on the same page with. So being open about what you think are flaws. Like, I never get upset. It's funny. You either have people who have major issues and they think nothing's going to be a problem, or you have people who have minor things that we're going to work through and they're convinced that it's going to derail their ability to buy a home. So they want to say, well, what about this? Well, I had a JCPenney charge card in 1978, and I think a payment may have been a day late because they charged me a $5 late fee. And you're like, well, that was 47 years ago. I think we're going to be just fine. But it really is that extreme. So asking questions about anything about your situation. Hey, I might need gift funds. If I need gift funds, is that a problem? Anything that you think is unique about your situation. But in terms of asking a loan officer, the big one that we get, I'm sure you get this too, Jerry. How do you get paid? Do I have to pay you? Do I have to pay you for this consultation? And it's like, no, it's an interesting industry. I make no money until we get to the very finish line. Just like Alexis is a realtor, makes no money until we get to the finish line. So it's good because our incentives are aligned. Jerry talked about having rapport, being cool, us vibing, us being on the same page, us being open, honest, and comfortable with each other. That's my job to give you that level of comfort. Just in general, like it's funny. I will circle back. I'll say, when someone is shopping for a mortgage, there's three things that I don't know that they're equally important, but you almost have to have all of them. The first one is competitive rates and fees. Part of the genesis of the VettedVA group is that the biggest VA lender in the country doesn't have competitive rates and fees, and they do more VA loans than anyone around. And Christopher Griffith, the creator of this group, said, well, that kind of sucks. Why are the majority of veterans, or a plurality of veterans, going somewhere that doesn't have the best terms for them? So someone should have competitive terms. Notice I didn't say the rock bottom lowest rates in the world, because if you chase after that, you're going to have problems. But they have to have knowledge and expertise, which as a first-time buyer or someone who hasn't done this in 7 or 8 years, that's pretty hard for you to determine, because a good salesperson may not know anything about loans and can do a great job of convincing you they have knowledge and expertise. And the last piece is that rapport. Who cares if you have the person with great rate and fees and knows everything about loans, but he's just a turd? Like Jerry said, being available. You can't get them on the phone. When you get them on the phone, they're short. They make you feel dumb. No one wants to work with that person. So all three of those are really, really important. So you asked a brief question. I gave a very long answer, and I've given Jerry no opportunity to put his 2 cents in. But Jerry, do you have some ideas of things that a buyer should be asking the loan officer on that first call?
You know what? That is really a hard question, because we don't know what we don't know. So until we actually get started in the conversation with the individual, it's really hard to kind of really give you any general direction to go in with the question. What I would say is ask about your specific employment type. Ask about, whether or not this particular company has any sort of fees that they charge for anything in particular, anything that you're going to have to pay for up front. Because not every lender is the same. A lot of lenders, especially after the market kind of shifted really roughly, a lot of us within the companies that we work with no longer foot the bill for the appraisals for generally in VA it's not the case, right? Because it gets billed through the VA. But when it comes to credit reports, when it comes to certain items that come up, right? A lot of these things are now like, well, hey, you know what? I'm sorry, I'm going to have to. Here's the link. You take care of it once you pull your credit. It's your credit report. Just shoot me over the file number. And for others, it's like, if it's like, let's say if it's FHA or conventional type purchase, even though you're a veteran, you might be using one of those two loan types for another purchase because you've already exhausted your benefits. And if that's the case, just know like, hey, yes, you're going to pay for these up front. We're not going to foot the bill. And so some of those situations really start shifting some of the approaches from certain people. So it's better off that right off the bat, like, yes, am I going to have to pay for something? Because if I am, just let me know, because I'd be good with that. But I think other than that, it makes it really difficult because there's really no questions that you can ask a lender other than ask them questions specifically about VA and your particular circumstances. So if you know that you have certain benefits, let's say you have a disability rating or something like that, ask them like, hey, what about the funding fee? Am I going to get hit for it because I have this percentage of disability rating, or I get a disability compensation, right? And so that makes a difference, because then you'll identify whether or not the person even knows whether or not they'll be exempt from their funding fee. Whether or not it's a first-time use or subsequent use, whether there's a change in the fee, a difference in the fee. Sometimes certain lenders don't know that, especially when they never work with VA. They don't know these things. And so those are questions you may want to ask just to kind of feel it out and whether or not that individual is actually knowledgeable at all about VA.
And along those same lines, Jerry, so you hinted at it. Let's say it's subsequent use and they don't have a down payment. So they're looking at a monster VA funding fee. At that point, they may want to ask, hey, should I be looking at conventional? Should I be looking at other options? I mean, in that instance, if they don't have a down payment, they're probably going VA again. But should they be looking at making a down payment to get that to a much more reasonable level? And many times the answer is yes, if it's possible. But again, those are things that reveal, is this a person that is dealing with VA financing regularly? Alexis, another piece that falls under that, many states have property tax exemptions, and they are all very, very different. So different in the amount, different in when they can be attributed to you for qualifying, not qualifying. So all of those things are very important to ask up front. We kind of jumped over a piece of this in terms of saying, okay, now we've got you pre-approved, and that handoff back to the realtor. Part of that, once you have been pre-approved, and again, for veterans, for VA borrowers, this is unique in that we're not saying, well, is FHA or conventional better for you? We pretty much know VA is the right loan. So there's a couple of different ways of structuring it. We can do 0 points. We can do 1 point. We can do a 2-1 buy down. We can do a standard, permanent buy down. So there's not as much in there. But what I always like to say, once I tell you you are pre-approved, there's 3 really important numbers. What's the maximum that I can qualify for? Which again, with VA is really unique, because most times, because of the ultra high DTIs that we can do with residual income, most people shouldn't be going to their maximum. But what's the maximum within the constraint of what you're comfortable with and what payment you're good with? What is at that maximum? What is my monthly payment? And how much cash do I need to have a closing? Like, you should not be sent back to your realtor without knowing that information. I talk to people regularly. They go, oh yeah, I've already been pre-approved. Okay, well, cool. What were you pre-approved for? 500 grand. I can do 500 grand. Okay, cool. What's your interest rate? Oh, I got no idea. What's your payment? I got no idea. How much cash do you need? I got no idea. Well, how much cash do you have? I don't have any money. So you have no money, but someone pre-approved you for $500,000. How did they do that? Were we asking the seller to pay all your closing costs? So you're a veteran, you don't need a down. So it sounds crazy, but these are the things that we hear on a daily basis. So when you walk away from that pre-approval, hopefully you had a front end call, you got your questions answered, you built some rapport with that person, you provided documentation because they asked you the right questions, all of the documentation to confirm 100% that you can be a pre-approved for this loan. And with that, here's my max, here's my monthly payment, here's the cash that I need to close, and I'm comfortable with all of those. Now, at that point, we should be sending them back to Alexis or their realtor. So when I do that, Alexis, besides the conversation that Jerry was just dead on, that it is really important. More and more in the internet age, people find us online, find us loan officers, find realtors online, and they find them independently of each other. So I find myself, I don't do 10 transactions with one realtor every year. And we're best friends. We go out to dinner on the weekends. I get to do one transaction with my new best friend for the next 30 days while we find you a house. So it's important that, just like we built rapport on that first phone call, that the realtor and the loan officer are not territorial. They're not fighting over each other. Whose client is it? Who's going to call the shots? That we are working together to meet your objectives. So Alexis, when I say Chuck and Susie approved for $500,000, their payment is X dollars per month, they have this much, and we're going to need anywhere from $3,000 to $5,000 in a seller credit, or we got to get it in a lender credit and they don't want their payment any higher. What's your reaction, and what are you asking of the loan officer at that point?
I'm going to confirm with the loan officer. So I will say this: it's not that I don't believe what a purchaser is saying or your real estate agent will take you at face value, but we want to make sure we're all on the same page. And sometimes there's a lot of information, especially when you're new to buying a home. There's a lot of information and things that kind of be lost. So sometimes there is fact checking, but don't take that as a disrespectful act. It's just part of the process. So Josh, yes, I would confirm with a loan professional to make sure that these are accurate numbers. Also, I'm going to make sure that we have some wiggle room there. Is this already at the very top of their budget? Can we go over? Sometimes here in VettedVA, you hear the term of rolling closing costs into, you can roll your closing costs into a loan. Well, that's not the case. You up the sales price, and by ever X amount of thousands of dollars the closing costs are, you can do that with any loan type. So those type of things, we want to make sure at all times that we're all on the same page and we're communicating good. And I'm going to say this, I'm, the only agent on the call, is sometimes I've encountered purchasers who have come to me and they've talked about being in a different transaction, or maybe they were working with another lender team or agent, and they kind of felt like there was competition there, right? What Josh was talking about. Be mindful when you're in transactions that you need a fact check too. Okay. Just like how the real estate agent's going to fact check and check with the loan officer, or the loan officer is fact checking you with employment and credit and stuff like that. Do your due diligence too. You don't want to, if somebody's telling you something, you still need a fact check. This is why VettedVA exists. We're open. You could come in, you could post and ask questions, get honest feedback. So do your due diligence, because remember, you don't know what you don't know, and it's okay to question. So hope that helps.
No, it absolutely helps. Now, in terms of we're all on the same page, you, me, the buyer, we know exactly what we got. We know what we're looking for. They've told you they want this perfect white picket fence, $482,000 max purchase price, got to have 3 bedrooms and a man cave. So we know exactly what we're looking for. You're getting ready to go out and help them find that house. What documentation should the borrower have or the loan officer have provided you so that you're equipped to maximize the odds of getting an offer accepted once you find that home?
Your pre-approval letter, and if you are in a market that is competitive, proof of funds. Okay, something that shows that you have proof of funds. And let me back that up. Not even a competitive market. Sometimes people want to see proof of funds if you're paying your own closing costs. I mean, the seller can do what they want. They want to make sure the seller wants to fact check stuff. They don't want somebody to get to the closing table last minute and say, "Oh, I don't have 20,000. Can you pay?" And the seller's like, "You just wasted 30 days of my time." So make sure that you have your pre-approval letter. Personally, as a list agent, when my sellers hire me, I like to fact check the buyers that are coming. Make sure your pre-approval letter has a good date on it. The market changes constantly. So if rates kind of go up, if you have something a month ago, I don't know if you're still pre-approved today. You could have lost your job. Maybe you don't qualify anymore because rates jumped. I'm not sure what's going on. So make sure you're working with a loan professional that communicates. A lot of real estate happens after hours on weekends, that they're communicating properly with you so you can get an updated pre-approval letter.
Well, I think that's an important line of questioning here that I think we should go down. So Jerry, you finished, you have determined borrower is qualified. They can buy that $500,000 house. You've gone through the numbers. They're comfortable with the payment. They're comfortable with the interest rate. They're comfortable with the cash to close. Oftentimes we get this from the borrower. Okay, cool. So do I get a pre-approval letter now? How does that work, Jerry? Do you give them a generic pre-approval letter that says 500,000, knowing they might go out and find a $472,000 house to make an offer on? And so how do you handle that? Do you give them an upfront one that kind of shows their max and then offer to make a custom one to any offer? Do you just give them the generic? How do you handle that?
So me in particular, I will initially always tell them what they're pre-approved for. And if they want to have a pre-approval letter for their max, I will give them that. But for the most part, it's going to be tailored to that particular home or offer that they're making. So a lot of times when I do make that presence known in that group text, it's like, hey, you're pre-approved for X amount of dollars. If you'd like a pre-approval letter, let me know. I can issue that over to the realtor. And I have it to where it automatically, because once I know I'm in a transaction or going to be searching for homes, the realtor gets added into my portal. And then at that point, anytime I issue out a pre-approval letter, it goes to them too. So if they need to look at a particular price point or adjust something, then I make those changes on my side and then issue that automatically over to everybody. And so when those things come up, then it's easy peasy. The realtor gets an updated pre-approval letter, and obviously they have proof of funds because I will typically have given them the at least a snapshot with the client's permission, right? A snapshot of what their bank statement looks like. Here you go, and everything's ready to rock and roll. But again, it has to be tailored to that particular home because otherwise, I don't want to put you in a disadvantage by giving you a pre-approval letter for $500,000 and you're making an offer on a $475,000 house. And let's just say you're offering $485,000 and you're trying to get $15,000 back for, let's say, 2-1 buy down and some of the closing costs. Well, then at that point, having showed them that you're qualified for up to $500,000, that they're going to be like, well, how did they qualify for that? Like they should have had some money to be able to cover their own stuff, if that's the case, right? So the last thing I want to do is open up that box to be dissected and just torn apart. Like the thing has to be precise to that particular home. Again, every home is different, so we have to also be precise on taxes, on HOA fees. Just because it's an SFR, it could be in a PUD, and because it's in a PUD, it's automatically going to have an HOA. And so all these little things matter. If it's a condo, then obviously I have to check that the HOA is approved, and all that comes into play too. So I'm not just going to issue out a pre-approval letter for that dollar amount, not knowing that they're going to offer on a condo, and then it's not going to be on the approved list. So those things all have to come into play when issuing a pre-approval letter.
So Alexis, from your perspective, you talked about, hey, proof of funds, if the loan officer has it and the borrower is okay with it being provided to you, anything else that you want to see besides the pre-approval letter? Basically spells out the parameters: qualified for VA loan, $500,000, possibly proof of funds. Anything specific that you want to see in that letter? And then again, to you, do you have a preference? Here's your $500,000 letter. Go write as many offers at any price point as you want, or do you go back to that loan and say, "Hey, we found the home, but it's only $478,000, and we would like that updated letter"? So, 5 questions there for you to answer,
Well,
Alexis.
I'm looking for contingencies, just like we have contingencies for in real estate and contracts. There's also contingencies on pre-approvals. We talked earlier about selling a home. Sometimes it's job offers. I work with a lot of military clients near a base, and sometimes GS employees are waiting for certain security clearances or waiting to get the job, things like that. You can have that, or it could be anything related in there. So I do check that over. And no, we're not just going to go and start looking at homes. We're still going to talk about a perimeter, discuss. I'm back to fact checking, making sure that the loan officer discussed with you if you're aware of how much this home is going to cost you a month. Often, as has already been discussed, some companies, some lenders will just pre-approve you for what you can afford. I like to say it's not what you can afford, it's what you're comfortable paying. Okay, there's a difference, right? We all can afford a lot of things, but are you comfortable paying? I don't know. So kind of get to that nitty gritty, discuss if they're aware of that certain areas of town, depending on how taxes run, insurance, such as like flood insurance, that might be extra that's needed. Sometimes I even ask people if they've had previous water damage claims. If they're coming from a storm damaged area, if you're PCSing in, you're coming from an area that just experienced a hurricane. How did that affect you? Because sometimes that can make your next time you go to purchase, your insurance is going to be higher. And remember, your insurance and your property taxes are tied into your mortgage. Okay. So that's why that talk comes into play. So kind of ask that sort of stuff and kind of go from there, explaining what you can get, what the buyer can get at the price point that they're approved for. Just because the number 500,000 is thrown out here, a lot of them use that. Just because you're approved for 500,000 doesn't necessarily mean that you should only be looking at 500,000. No, maybe you want to look at 435. Okay, so that's good too. Just kind of set up a good communication. Now, I know we're talking about, Jerry mentioned how for pre-approvals, you might want to go in and if the house is 475 and you're approved up for 500, not really show all your cards, right? Kind of get an established communication with the agent and the loan officer. It's not uncommon for me sometimes to reach out to the loan officer to ask for a pre-approval. Okay. So kind of like a concierge type service. So kind of get that going too, because sometimes maybe you're in the car, my clients are in the car driving back from a showing, and I'm already on the phone talking to the loan officer saying, hey, this is the house we're looking at. This is a pre-approval. Like Jerry said, we're trying to get an exact number. You don't want to show all your cards. So kind of establish if you would like the agent to go with that. A lot of lenders do have portals where you could just go in and generate. Sometimes agents can do that too, but still establish that communication. And if you want your agent to be tasked with that, sometimes we are, and for me, I'm totally fine with it. So,
well, not just wanting them to be like, In a perfect world, that's my preference.
Mm-hmm.
You as the buyer should not have to say, hey, I went out with Alexis and we found the property. Can you get her this letter? Because it has to get back to her. The pre-approval letter does the buyer no good. You're not going to be writing the offer. You're not going to show it to anyone. It needs to go to your agent. So there's a couple things. I want to make sure that she or he, your agent, is getting exactly what they want, that we are 100% on the same page. We're not sort of having this roundabout conversation. Want to know that, hey, is there anything you need to know in how you're writing the offer? Maybe you talk to the listing agent. It is really important to these people. They will accept this offer if we can close in 14 days. Can you close in 14 days? There's a ton of conversations. How quickly is the VA promising appraisals back at this point in time? There's any number of things that can go back and forth. And probably most importantly, and Alexis, tell me what your thoughts are on this. I always ask that agent, please include me on the offer. Yes. I'm going to call behind it. And the reality is, some parts of the country, you may be the only offer. And if so, great. Me calling isn't going to make much of a difference. But if there's 7 offers and only me and one other loan officer call, I don't want to speak for realtors, but as a realtor, Alexis, how do you look at that when you're representing a seller and you have multiple offers and 1 or 2 loan officers are calling, following up, asking if you or your sellers have any questions, cross-selling the qualifications of borrowers, telling you timelines we can hit, what you should expect throughout the process in working with us?
Okay, so as an agent, I like that. All right, you're showing me that, hey, maybe I need to call you for my next deal, okay? Because you're on top of it. So it shows that you have someone that's engaged and they're on top of it. It also helps when it's somebody who's maybe not right down the street. You can establish, hey, okay, here's this person. They're putting a name, because sometimes you can be physically in a location, but maybe your headquarters is somewhere else in the state. Okay, something like that, a couple hours away. People are like, well, where's this at? So it's always good for me to talk to someone. They could also talk up the client, anything that could kind of help get you in the door, because the goal is, especially when it's competitive, or even if it's not competitive, there's still VA hate out there. Okay, there's still some VA hate. So it's also good when you have a loan professional that is backing up some VA loan facts. It's great to have an agent there speaking on it. But it's even better when the loan officer is engaged, talking, debunking myths, able to reference the VA loan handbook, things like that we talk about in VettedVA. So yes, it's definitely a plus, gentlemen. I like it.
Absolutely. Question for you, Jerry. Do you, when you're doing that pre-approval letter, it's funny, I hear people that are adamantly pro or con this. Do you include the automated underwriting findings with your pre-approval package?
So it really depends on the circumstances. First and foremost, I've been told that that's a no-no when it comes to actually doing it in itself, because that's a violation of the agreements that you sign when you're running automated underwriting. But depending on the market, some places will require it. It's no ifs, ands, or buts. Like, they want to see it, and if you don't show it, they're not even going to consider you. So you have to kind of figure out which side of the fence you stand on. And for me, it's just going to depend on the situation. If the location deems to see it, like, I will show part of it. I'm not going to show the whole thing. I'm just going to show that, hey, here's the first page. It shows approved eligible. It shows the income and assets verified. You're good to go. Like, that's all you need to know. Like, there's nothing else that's in this pre-approval or AUS underwriting result that you need to see. So for my benefit and for my consumer's benefit, like, the last thing I want to do is show all the cards. I'm going to show just enough and make sure that at the end of the day, like you were saying, that phone call is key, because I'm gonna make sure that I'm the first in line to eat. You know what I mean? Like, big boys gotta eat, and the only way to do that is if I open my mouth. I can't do that if I'm sitting here quietly with my mouth shut. It is the saying, right? Closed mouths don't get fed. So if you are looking to make sure that you, as a veteran, are getting your offers seriously considered, a lot of times you need someone that's going to have the initiative. You're going to need to have somebody that's willing to have that conversation, as uncomfortable as they sometimes can be, because there is, like Alexa said, a lot of hate. And so when you do see that hate, and you do see that total misconception of some of the concepts and rules and requirements, hey, guess what? Like, I'm gonna come to bat. Like, I am going to show up for my veteran, because at the end of the day, they've already done their part. They've earned their benefit. I'm here to do this now for you. So those things make a huge difference when approaching a offer going out and also presenting what it is that they received. Because at the end of the day, you have to showcase too, right? What, like that, this file inside and out, and that exactly what you're going to run into. And that way that realtor then feels like, okay, wow, like now I feel like, okay, like you are on it, and I can trust the fact that you are, giving me a straight up answer in regards to what's going on with this particular consumer.
A loan file is so complex that it doesn't take, 3-minute conversation, asking a couple pointed questions. A good realtor can figure out whether the loan officer knows their file and knows their stuff or not. In general, I know how that conversation goes when we're done. First off, do you have someone that's just going through the motions? And there are realtors like, yeah, okay, well, okay, I saw this. Okay. And it says 10 days on contingencies. Are you good with that? They're just going through the motions. But if you're saying, hey, I see this, it says they have this much money. Is that money liquid? Have you documented it? Has the file been through underwriting? They're asking very specific and pointed questions, which is my preference because I know my file backwards and forwards. So we can have that conversation. We can demonstrate that knowledge and expertise, not just in general about the program, but about that specific file, so they can know that we're on it. And kind of like to Jerry's point, I don't have a problem. I will tell that realtor, hey, the only reason you should select our offer is if you want an awesome process with someone that you can communicate with the whole time, that's going to close on time and keep you in the loop. And if anything by chance does go wrong, because we both know that you do enough transactions, something will go wrong outside of both of our control, but someone that doesn't disappear, doesn't hide, doesn't stop returning your phone calls, that's the only reason you should accept our offer. If you want to deal with the 80% of loan officers out there, which at least 80% are close to worthless, feel free to talk to them and have them run you around in circles. And they start shaking their head and doing exactly what Alexa's saying, because it's sad, but it is true. And so we don't want Alexis feeling too good about her realtor crew, because they're about the same. It's truly, both of these are 80-20 industries. 80% of the people you do not want to work with. And even of the 20% that are good, you want the top 20% of that top 20%. So it's 4 or 5% are amazing, 20% are good, and the rest you have to figure out how to wade your way through that process. Alexis, just a quick question. In your market and for you personally, do you like to see the automated underwriting findings, or is that something that you don't care?
It depends. A couple months ago, I got maybe it's been about 6 months ago, it was an FHA, and it came across with a very low credit score, very low. Now, professionally, I'm a real estate agent, not a loan officer, but professionally, I knew that even though that score was low, they were still going to be okay. I was stunned to see it on a pre-approval. So, depends on different areas. I can't really speak to how it is in different areas, but be mindful of that. And I want to touch on something else too, since this is VettedVA and most people here are active duty or veterans. There is a popular military friendly company that also does insurance that sometimes, and they do home loans, sometimes they will put your rank on your pre-approval letter. Now, if you're going in and you're asking for closing costs and then they see your rank on the pre-approval letter, they're going to go Google how much you're getting paid and think, oh, wow, you're rich, right? So be mindful of that sort of information too when it's on your pre-approval letter, or if it's in emails, communication. People don't need to understand. A lot of civilians think of what they see online, and they're going to assume they could be looking at the wrong pay chart, just think that you have a lot of money. They're like, why is this guy asking me for $15,000? So that sort of information, in my professional opinion, don't have it on the pre-approval. And if your lender's insisting putting your rank like commander, 05 or whatever your rank is, yeah, go see somebody else, because it's not a good look. It could backfire on you.
And all of this is a really good conversation. So again, you picked a realtor you have rapport with, you picked a loan officer you have rapport with, and they need to be having rapport with each other. This is a great conversation. When we do the pre-approval letter, how much or how little do we want to have on that? When I have a borrower that has a really awful credit score, like we can do VA loans with the 592 credit score. My normal pre-approval letter, we write on there, and this is what the credit score is, because most of my borrowers have 742, 712, 819. And you're like, hey, we want them to know this is a very good credit score. When it's 598, that comes off of there. And they may ask, because they're going to go, usually I see these and it gives me some sort of indication. And kind of to underline Jerry's point about for us in Southern California, most agents do want to see those automated underwriting findings. And if they have multiple offers and they're getting serious, say, hey, do you have automated underwriting? Can we get a look at it? I had one for a veteran here that this is like the perfect example of how it can go wrong and why you may not want to just, as a matter of course, do it with the offer. This borrower was using secondary entitlement. They were making a down payment. It was $1.3 million purchase. The debt to income ratio was 72% because we weren't renting out the departing residence. We were going to sell it after they closed this. I'm looking at it. I knew we had a rock solid pre-approval. We had the automated findings, and I told them, no problem. They're cool. Send us the pre-approval with the automated underwriting. We send it over, and I get a call from their loan officer, who I looked up his NMLS. He's been doing loans for about 3 years, and he's going to go through with me and make sure that we know what we're doing. He didn't know what secondary entitlement was. He had never seen a DU findings with a 71 and an approve eligible. And it was cool. When we're done, I had educated him, and he then did finally turn around and tell the realtor, no, they know what they're doing. They're going to get it done. But there were a lot of questions on there. And as Jerry said, why it's better to just show that first page that says approve eligible, it shows debt to income. It shows credit scores. If you're excluding any debts, it says you're excluding debts and what proof is required of that. So there is a lot of information. It's not personal information. It's not divulging your social or any of that sort, but just shy of that, it's an X-ray of you as a borrower. And 90% of realtors have no idea what it's saying, but 10% of them will look at it and they'll ask questions that you don't necessarily want them asking. So even though it says approve eligible and you have an 800 credit score and a 32 FICO, it might say in there it's 100% gift. And they go, oh, I didn't know it was gift funds. I had a problem on a file 3 years ago with gift funds. I don't like accepting offers with gift funds. So there's a lot of info in there that you may not want the listing agent to know, and they don't need to know, in addition to your rank. So we've covered a lot of ground, and I think we've done a really good job of giving people an idea of what should that pre-approval look like and all of the pieces of it, where they go through that process up to and getting your offer accepted. One thing, Alexis, that you had brought up that we didn't really go through yet is the changing landscape for insurance. I used to just estimate a percentage of the purchase price, and that doesn't work. Because those amounts, an example, I had a $1.7 million purchase close earlier this month. His insurance was $62 a month. I have a $200,000 purchase that will be closing later this month, and it's $279 a month. So you're like, this doesn't make sense. The one property is gorgeous and brand new, and the one looks like it would cost about $8 to rebuild. But one is in Florida, an old house in hurricane country, and one is a brand new house built yesterday in Fountain Valley, California. So from an insurer's perspective, so with that, Jerry, how are you handling that? When, if ever, do you say, hey, we really need an insurance quote up front? Because we know, you see the headlines, record low affordability right now means we have higher debt to income ratios. Yeah. So if we're pinned on that DTI and that insurance goes, hey, it's not $122 a month, it's $222, we can have a problem. So how are you handling that with your clients?
Yeah, I think you hit it right on the head when you mentioned Florida as the basis for this conversation, right? Because Florida, I think if you see the numbers and how crazy they've gotten with insurance, the southern section of Florida is massively impacted with insurance costs. I think their insurance usually is averaging somewhere in the ballpark of about 1% to 2% just on the insurance. Then, let alone sometimes even the taxes are just as high. And it's like sometimes you're actually paying more on insurance than you are on taxes now in southern Florida. So it just really depends on the area, whether you're in a flood zone, and all that comes into play. And really, those estimations no longer work. Like, you really do have to call and make sure that, hey, because you don't know the history on some of these houses. Some of them have already had massive damage, and because of it, now you're having to now be like, oh snap! Like, I was not counting on this number. Now I got to reevaluate and get a quote. Once we get a quote, some places like Florida will ask for what they call a 4-point report. And in turn, because they're asking for this report, the insurance will make a decision based off that report, and now your insurance costs just jumped up another 0.5% per se, and that can be a massive difference. It can go from $230 all the way up to $400 or $500 a month on insurance alone. And so those things make a huge impact, or have a huge impact when it comes to your pre-approval, because now that could have pushed you over the either residual, qualifying on residual income, or where the automated underwriting system just will not approve you, and you're going to have to go through manual underwriting. And even if you went through manual underwriting, you might not meet that criteria because your DTI is too high, and it's just not gonna fly. Because a lot of investors will still put a override here where they're going to say, okay, here's an overlay that we have. We will not go over 55% or 60% DTI. And if those things happen, that deal's dead. And the last thing we want you to do is walk into an offer and then find out that was a total waste of time, right? Having you spend money on inspections and doing all this other stuff, the appraisal, everything, and then find out like, oh man, I don't even qualify. Even if I came in with money, I might not qualify. So those are scenarios that definitely make a huge difference nowadays, especially with the market the way it's shifting. Higher interest rates are still an issue, but although they are improving, it doesn't take away the fact that all the other costs matter too. And so we have to be very aware of those things. Like I said, the insurance, the hazard insurance, the flood insurance, fire insurance. If you're in California, you have to worry about, the California Fair Plan, because that cost is ridiculous and the initial premium is ridiculous. So those are like factors that really will take a pre-approval and just take it if they're not careful.
When should people start shopping for homeowners insurance? At what
point? I've been asking them to do it at pre-approval, not at contract, at pre-approval. I used to tell them, hey, cool, I got this contract. Please get on your insurance. I tell them now, I would check. Check. I don't think the area you're looking is problematic, but at least reach out to someone that you think you're going to use for insurance. Say, hey, we're looking to buy a $450,000 house in this county. Can you give me a range? And you got to tell the agent, I realize the type of roof, the exact location is going to change and alter some of this, but can you give me a range so that I can tell my loan officer so that we can know, because my debt to income ratio is a little bit tight. And even if it's not tight, you still want to know. You don't want to find out, hey, we get into escrow and it's 350 and not 150.
Right.
No, big difference there, because the moment that you end up going to submit an offer on a particular home, sometimes the agent's well aware of what that insurance cost is for that current seller. And if you can find out from them what they are paying, that'll be a definite easier gauge for you as a loan officer to identify whether or not that's going to blow things out of the water for you. Because I definitely had one where it was a lesson learned, right? A couple of years ago, where it was like, I quoted $200 a month on an insurance, and it ended up being $325 because there was already issues in this house before that they've had multiple claims, and now it's almost uninsurable. And so those things come into play and then really does some damages. Thankfully, in this case, the buyer decided, knowing that, like, I'm out, I don't want to take on this home. But imagine if it's somebody that does really want this home and all of a sudden can't do it because you ended up not having your facts. So a lot of times ask the listing agent, hey, what's the insurance cost run on this particular seller's policy at the moment? Like, what are they looking at? Because that'll give you at least a gauge, a better understanding of what that cost can be.
I have a buyer in a fire hazard area here, looking to buy in a fire hazard area down in San Diego County, inland San Diego County, and did exactly that. They knew, and they're like, this is going to be bad. So they were at the open house. The seller was there, and he said, hey, how much is your insurance? Oh, that's about $475 a month. So at that, they go, you know what? We think we're going to look for a different house. So at least the seller was honest with them on that. A thought here that came to me, trying to put a bow on all of this while we're watching. It's often hard to say. We talked earlier in the show that you want competitive terms with someone that's friendly, that you have a good rapport with, that has knowledge and expertise. And as a buyer, you don't deal with this very often. How do you know that someone has knowledge and expertise? Sort of a cheat code. You noticed about 900 little things that Jerry and I said during that pre-approval process we're going to be asking you. If instead of asking you 900 questions, they're asking you like 4, and they tell you, great, you're pre-approved. That's a sign, because all of those questions that I asked, the little things that I go through in that pre-approval, are things that have been an issue somewhere along the line.
Did you even ask about the COE? Right?
Yeah.
Did they even ask about the COE? Like that, like you don't have a COE, you don't have a pre-approval, dude. I'm sorry. Like, what are you doing?
And it sounds shocking that would ever be a thought that you had to deal with, but I get a call at least once a year from someone at the 11th hour. Hey, we're supposed to close next week, and apparently I'm not eligible. Like, I just don't understand it. I don't understand it. Like, what are we even talking about?
I get that all the time, especially when you have people that are in the reserves and they don't have, or the National Guard, right? And they don't have their points totaled up to where they actually qualify. And then all of a sudden they're like, well, I thought I qualified. It's like, no, dude, like, they should have pulled your certificate of eligibility to start.
Or they own another house. Yeah.
But at the end of the day, it's like, again, you're still responsible for asking all the questions. And unless you're asking for these things and you're doing your due diligence to make sure you pull that COE right off the bat. If somebody's not asking you for your information right off the bat to give you your COE because you haven't pulled it yourself, then to me, that's a red flag. Because that already tells me that this person hasn't really done this enough to where they know how critical that document is. Because if you don't have your COE, they're going to need to ask for your DD-214. If you have that DD-214, great. If you don't have it, guess what? Now you got to go get it. And if you separated many years ago, where now your stuff is in archives, guess what? That's going to take some time. So those things all matter. And and the person that you're working with needs to understand that those things are important. Those are key pieces to this puzzle. And if you do not have the two main components of this, then you might as well know that this person didn't know what they were doing.
Jerry, what is a COE? We keep saying a lot of our viewers might not know what a COE is. They know their DD-214, but they might
and they'll get confused on the real estate term COE too. So certificate of eligibility, right? So your certificate of eligibility is the document that you are given that basically entails whether or not you are eligible. And it has a few key factors. I even broke down in a TikTok, right? Like I created a video just about the COE, but it talks about.
Is that the one where you were dancing, Jerry?
You know what? I haven't done any dancing ones. I probably should though. I probably get a lot of views.
Get more views.
I got a lot of rhythm.
It's the it's the dancing COE guy.
But when you're talking about the certificate of eligibility, it's definitely a very important number because it tells you all the factors about what is going on with your particular benefit. Now, if you do not have it, like I said, the DD-214, that's definitely a document that you will know you have because you've separated. Now, the last final piece there is your close of escrow date. So there's two different meanings, right, for COE, and just know that those terms will get thrown around sometimes, and you might get them confused. But your certificate of eligibility, when it comes to the lender, is one thing. When you're talking to your realtor about a COE, it might be your close of escrow. So just make sure you know which one of the two they're referring to in that circumstance.
Awesome. Well, hopefully, if you joined us for this hour, you have a really solid feel of what that pre-approval should look like, what you should expect throughout the process, what you should expect to give, what you should expect to get, and how that team is all working together to make sure you have a rock solid pre-approval. You know what to expect, and we're getting from the front end COE of your certificate of eligibility all the way to that close of escrow with as little stress as possible. Before we leave, I will give both of you any final words you would like to share, Alexis.
You don't know what you don't know. So no question is too small, too silly, or too dumb. Okay, because am I lagging? I hope not. Because this is your mortgage. When the deal is done, you're responsible for the loan. No one's going to care that you weren't told something. Okay, so you have to open up your mouth and ask your agent questions, and definitely ask your lender.
Absolutely. Any final pearls of wisdom, dancing COE guy?
Transparency. Be as transparent as possible with your loan officer, with your realtor, because we can't fix what we don't know. So if you're not telling us there's a problem, if you're not telling us that there's certain money somewhere that you haven't disclosed, and all of a sudden there's a transfer of money going from one account to another that now we have to then source, that's a problem, because that's delays that are unnecessary. And so the best thing to always do is be as clear and transparent with your loan officer. Your loan officer can dissect and just be like, look, I'm not going to touch this. I don't want to use this. So we will respect that. We will make sure that you know, like, hey, not a problem, but we will dissect whether or not that is something that we need to take out or not from the file. Because if there is a transfer or something, we're going to have those documents in there to validate that this is an issue, right? So at the end of the day, the truth and transparency in everything you do, the communication needs to be constant. If you are not being constant, then we can't be constant in regards to what we're going to deliver. So my biggest suggestion and opinion here is going to be the facts are going to lie with the information that you give us. And as long as you're being honest and truthful and transparent with us, we're going to be able to run a heck of a lot further than anything else.
Absolutely. All right, friends, we will be back next Tuesday with another topic, another set of pros. We got no questions tonight, so apparently no one likes us and wanted to ask any questions. But next week we'll be back, so hopefully everyone's saving their questions, and we'll see you guys next week. Alexis, Jerry, thanks for joining us.